and welcome to CNBC-TV18 Conversations. Our conversation today is with an iconic banker who is in the thick of the global economy and the financial markets, who will perhaps have all the answers that Indian financial investors are seeking. My guest is Vis Raghavan, the Executive Vice Chairman and Head of Banking at Citigroup. Mr. Raghavan, thank you very much indeed for joining us.
No, thanks for hosting me.
Well, I want to ask you about a lot of things about Matunga. You come from Matunga, where I come from, but we'll keep that conversation for later in this chat. Let me start with what our viewers really want to know, the growth story. I mean, you must be talking to the largest number of bankers since you head banking at Citigroup. Are you getting a sense that the corporates are willing to invest? Is the growth story intact in the US and in, the global economy in general?
Absolutely. I think, you clearly, we will not go, there's a whole AI-fueled, AI-powered boom that is, absolutely omnipresent. You can feel it everywhere, and almost you get the sense that if you're not part of that entire AI regeneration, you're going to get left behind. And that is very, very real. It's palatable. And everyone is investing, everyone is focused on it.
Okay, 1 minute.
Yeah.
That part of the growth everyone is buying in.
Absolutely.
I'm asking you, if outside the AI part, when you talk to corporates, what's the sense?
So look, I think there too, you're seeing growth across the board. And if you look at, that growth engine, technology, I'm not talking AI, technology is very much at the heart of it. So if you look at a major industrial in the US, they're looking at acquisitions in the tech adjacencies. So software, so if you take a real diehard, core industrial company, they will look at the tech adjacencies. If you take retailers, it's e-tail. So if you look at the autos, it is kind of, autonomous driving, driverless cars, it's really a tech nexus there. Same with healthcare. So I think a tech undercurrent is very much at the heart of, the growth, but there is growth everywhere.
Okay.
The biggest wild card is M&A. So with valuations where they are, if you're not growing organically, then it is acquisitions. And that is really a big part of the growth theme.
Okay. No, I'm persisting on the growth story simply because when this tariff issues cropped up, there was a sense of uncertainty in the world.
Yeah.
And there was a lot of fear that global growth will slow down. You're not seeing signs of that. I mean, give me US and global separately if you wish.
I think US, what you're seeing is 20%, maybe even up to 25%. You're seeing tariffs generally are being absorbed in most cases, in some cases passed through. The inflationary impacts of those remain to be seen. Okay. But right now, you're keeping a lid on it, and most companies are assimilating the tariff impacts. If it is beyond that, then the question is, you have to rejig your trade channels. You look at your supply chains, and then say, okay, what do I do? Do I friendshore, nearshore, onshore, offshore? How do I, play with the mix so that I'm still competitive and I can keep doing whatever I used to do? But what you're seeing is there is an element now prevailing that, in most cases, sanity will prevail. There is kind of a base tariff that will stick. But beyond that, reason will prevail. There's a deal to be done. There'll be negotiations, and you will land somewhere which is acceptable.
Actually, in the past 2 weeks, there have been a series of deals,
of that,
especially in the ASEAN countries. The president has also tweeted that something is coming with India. So it clearly looks like the ruffled feathers are getting softened at the moment.
Yeah.
But let me come to financial markets itself. What have you made of this rally in gold? You think it continues?
I think multiple drivers there, and it's a bit complicated. I think clearly gold benefits at times of tumult when there is uncertainty. You flock to that asset, and there's an element of that. The other point which is relevant here is clearly there's a lot of government debt, Western government debt, that needs to be rolled, refinanced. You take it. I mean, 30 trillion plus in the United States. There's France, there is the UK,
yes.
And a lot of that debt will come up for redemption, rolling over, refinancing and the like. And a key kind of factor there is not all the traditional buyers of this paper are natural buyers of this paper in the same magnitude going forward, because of geopolitical tensions, because of different stances. So it kind of, I don't think it's been kind of I've not seen any kind of calculation, but it's not entirely, just a coincidence that, you have gold at $4,000, $4,000 at a time when, you have got, government debt also kind of piling up. So the question is there any kind of rebalancing that's happening within those portfolios?
So gold's higher, this big run, this 50% rise in the past year is likely to remain that way. You don't see it getting corrected.
I don't see any catalyst that kind of, drives that. Okay. Bar some, very stable world where all the conflicts get resolved and,
which doesn't look anytime
and everyone
soon.
is in a happy place and, and we go about, holding hands and.
Let me couch the question in the context in which you've come now. We just saw NBD buy 60% stake in an Indian bank, RBI, and then we saw before that SMBC buy about a 24% stake in Yes Bank. So foreign bank interest, not just private equity, which is of course Blackstone is buying. Foreign bank interest has increased. Can you just explain, would Citi be doing more? What explains this interest?
So I think this is a pivotal moment because just like in 91, 92 was a pivotal moment for the equity markets, I think this is a pivotal moment for FDI liquidity flows into India. So I think, really kudos to RBI and, really I think the whole kind of regulatory framework for enabling this to happen because this will be a watershed moment for liquidity flows, just like the gates were open for equities, a few decades ago.
Yes.
So I think this you will mean more liquidity flows. I mean, yes, you talked a few about the bank investments and the like, but I would say this is auspicious for broad liquidity in general. And this is good for corporates. This is good for inward investment.
Absolutely.
And this has come at the right time, and really hats off to.
We could do with more banking capital.
Absolutely.
If this growth story rolls the way it is, which is going to be my next question. I mean, I know you're looking more at deals and banking rather than, FPI flows, portfolio flows.
Yeah.
But actually, lately the flows have been attracted to. China and some of the ASEAN countries. Yeah. Do you see the reversal?
Absolutely. I think it's a no-brainer. I mean, if you look at there are pockets, when you look at the big pockets of investment, America rules right now. I mean, this is where...
Outsized.
It's outsized. I mean, nearly, close to 70% of the world's capitalization is in the United States. I mean, U.S. corporations, take 40-50% of the world's profits are generated by U.S. corporates. The pools of liquidity, whether it is in public markets, private credit, private equity, public credit, all the walls and pools of liquidity are there. And the point is, if you wanted to invest, where do you go? So I think Europe is kind of, soul searching a bit. The UK has its own kind of nuanced post-Brexit kind of problems and issues that it is navigating. France, you've seen the story. Germany is kind of rediscovering its kind of industrial, strengths and the industrial framework. So I think Europe is kind of, right now, it needs to refocus and rejuvenate. China, you cannot ignore. I mean, it is an incredible economic power. We will figure out how to navigate China better and better. And right now, I think most folks are figuring out how to navigate it in the current, even more so in the current tariff framework. And then where else do you go? It's India. So there is an inevitability to India, ruling the waves, its relevance, massive consumption economy. When you got 1.4 odd billion people, whatever we can produce, we can consume, within this country. And also most folks are actually going up the consumption curve.
Yes.
So disposable incomes are going up, and quality of life is increasing and improving. So I think you cannot ignore.
So the portfolio flows will come.
The portfolio flows will come, and there has been the market has had an incredible run.
Yes.
Retail interest has been super strong. I don't have a view where how much leverage sits in that portfolio, in that framework. But clearly, retail have been big buyers, herein. So I think India, medium, long term, you simply cannot ignore. And you can see the other region which is absolutely blossoming is the Middle East. I mean, Saudi, I think they are just fresh on the back of FII. I think incredible momentum and a real kind of a energy in that market. And likewise, UAE is kind of is booming, and also benefiting from a lot of money flows outside of coming from Europe and the UK, where within our wealth management business, within our kind of private bank, etc., we've seen a lot of money flows, out of the UK, flock to the Middle East.
Okay, that's important. Well, speaking of buoyant financial markets, how much would you worry about something like this? First Brands or Tricolor or generally private credit in general? They had an exuberant run. This is a market which you should be looking at very closely. Are you worried about anything?
I won't make
wrong?
any reference to any insects and stuff like that in this discussion. But I mean, look, I think in all of this, there is a lessons learned exercise as to could this happen at Citi? What went wrong? And every institution kind of on the back of every one of these events, looks through their portfolio, runs the kind of the cleanse and makes sure that, are we robust? Are we buttressed? And is this kind of going to be? So I think a lot of that, Citi, we have done at Citi, and we made sure that our defenses are intact.
But it's a minor.
It is.
Hiccup, or is it a big problem?
There's fraud here, and at the end of the day, my view on fraud is somebody's going to rob your house. They're going to rob your house, and all you can do is put all the defenses and the bells and whistles and the controls around to make sure it doesn't happen. But there's elements of fraud, and from what I understand in these instances, are these. Is there kind of a ripple effect of any form? Yes, there are a few lights kind of, flashing.
But not a big domino.
But there's not a big domino, and all you got to do is you'd be very remiss to not kind of take this and make sure that you are, running your sanity checks and making sure.
Okay, fair point. We have to take a quick commercial break, but I'm back with more questions on the financial markets. Our viewers will be dying to hear a lot more about the Fed in particular. Back in a minute. Welcome back to this CNBC-TV18 Conversations. My very special guest is Vis Raghavan, the Executive Vice Chairman of Citigroup. We've been speaking about the global growth story, and Mr. Raghavan has been very positive on the global growth environment in general. But let me come to the financial markets yet again. You don't see this AI boom tripping markets. Is it like overdone to such a point like we saw, at the turn of the century with the dot-com stocks? You don't see anything like that it can...
I mean, famous last words. If I had a crystal ball. Okay. What is incredible is look at the dot-com boom. If you look at the whole internet revolution, and it started 97 or thereabouts, it really got hold. You saw frenzy. Any company with a dot-com could go get an IPO done, and then you saw a bit of a correction, and then look at where the 2 decades of prosperity. E-commerce, was invented just then, yes. And it is now, it's mainstream.
Yes.
You do not, most of us, that is our, our consumption channel.
Our way of life.
Our way of life. So I think AI will do something similar. It'll be seismic in the impact it has, and it'll be incredibly accelerated. So this will be, it took us 2 decades. This will be much more compacted, and new leaders, new champions, new heroes will emerge, and certain legacy models will get crushed. I mean, so there is a natural. It's a bit Darwinian in a sense, and there's a natural evolution that comes on the back of that.
Fair enough. So the concept will survive, but the fittest will survive.
But exactly, and the point is within that, fasten your seatbelts. there'll be rally correction, there'll be a lot of volatility. It'll get overdone in some cases, and it'll get oversold in some cases. And when it gets oversold, there's a whole bunch that are waiting to pile in, and then, and life goes on. So I think we get too kind of besotted by kind of the short term and it's too myopic to kind of just say, is this overdone? Is this gonna, the revolution is absolutely here. And within that, it's a roller coaster. I think it'll have its moments, and you've got to approach it eyes wide open. The one thing, as I said, I do think though that unlike the whole internet era or the kind of pre-dot-com era, I do think that the early winners will also feature. Many of the early winners will also feature as late-stage winners.
Oh, that's
whereas you remember with that, you remember
with the dot-com, that was not the case.
AOL and Netscape and all of that, and then you had some real champions come through, after. But here, I think the investors and the companies that are really kind of leading us into this revolution have the wherewithal, the financial wherewithal, and the economic might to really invest and kind of see through this journey.
It's difficult to see a world in our own lifetime without the Magnificent Seven. I mean, they're too solid to be wished to be.
And does the mix change? There'll be somebody more magnificent that that comes, and someone who loses and falls by the wayside. I think that's inevitable. That's kind of a fact of life. So.
Absolutely. Okay, let me come to perhaps one of your older favorites, debt markets and Fed. What are you expecting? Do you think the Fed is going to continue? I think the broad market expectation, if you go by CME Fed Watch, is another 100 basis. Do you think that's coming, or do you think inflation is going to be? I mean, it's 3% inflation.
Look, 100 basis points everyone is pricing that in. I think that is widely anticipated. The inflationary aspects are unknown. You are seeing energy prices, oil at about $60 or thereabouts, is almost kind of a damping mechanism around kind of inflation and the like. And then you have, within the mix, you have things around productivity, efficiency gains, and all
it's just the tariff-led inflation that everyone is worrying about.
We don't know that. We don't know what the unintended consequences of that are. And then the question is what happens to employment and what happens to consumption, because I think that is the wild card. And generally, if the macro environment is uncertain, you tighten your seat, tighten your fasten your belt, and then you consume less. And so I think that equilibrium will be attained. Mm-hmm. But you're still looking at, even if it is a 3-handle yield curve, that's a healthy yield curve. And what you will see on the back of that is a much more robust M&A environment, because financing becomes more attractive.
Yes.
Your cost of capital becomes more attractive. And then with equity valuations where they are, boards today have to justify their share price. Yeah. So if your share price is near lifetime highs, near historic highs, is fully valued, fairly valued, whatever you want to call it, with that comes responsibility. So the question is, where is the growth? And
therefore more deals.
More deals. Because if it's not coming organically, I better go buy my growth. Because if there's no growth, investors vote with their feet, and they punish you for not delivering on that lofty share price you have. So you have a very deal conducive environment, especially with a getting more benign yield curve. And then on top of that, you have the whole macro around tariffs, supply chains. Do I have to make in America? Do I have to buy in America? And the ultimate kind of fuel for the deal environment is the firepower of private equity. Private capital, whether it's private, there's about $2.5 trillion plus of dry powder, which they're paid to deploy.
Yes.
I mean, that's their job, is you got to go spend the money. So then with the yield curve, your spending becomes a bit easier, better. So there is a very healthy underpinning of, if valuations come down, there is buyer interest. Whether
golden period for deal makers.
I hope so, but the key is a relative certain backdrop, because uncertainty is the worst, and it's a deal killer, because boards will say we don't have to do anything now, let it pass, let's wait, and that let's wait is dangerous from a deal making point of view. So I think you are in an environment where the macro, the micro, the share prices, the yield curve, the amount of liquidity there is in the market, all kind of is pointing to, at least in the United States, a very healthy kind of deal environment. Okay. Then one other last point I'd make there is the relative valuations. So you have, pockets of Europe, et cetera, where you have fantastic companies that are undervalued, and there was a big move, last year and beyond, where they were looking at redomiciling, listing in the United States and the like. And they suddenly look very attractive when you have the currency to say, hang on, you got some very nice houses in bad neighborhoods that you can go and prey on. So, and I think even for Indian corporates, the time is fertile to really kind of, if you wanted to, really kind of, spearhead your growth agenda, and have a global kind of growth agenda. I think it's a fantastic time.
No, actually, the Indian government, the Reserve Bank has liberalized foreign loan rules.
Yeah.
And now we can take, Indian corporates can take foreign loans for M&A, which they couldn't earlier. And they can use even Indian bank loans.
Absolutely
correct. Fund acquisition. So,
which is important, because that means deals of size are eminently doable, eminently financeable, and the valuations are very attractive for if you want to prey on an overseas corporate.
Okay, I believe I'm running out of time, but I have to ask you the stable coins and crypto coins questions. With the Genius Act coming in, stable coins is a reality. Well, crypto also may come because there is the Genius Act also coming. Would you worry that you're lending against something which you're not sure?
I think the question is, lending against any asset is a function of the liquidity of the underlying asset.
No, but this one has been more volatile.
It's got more volatile, but then the question is, what is the collateral? What are the collar levels for the margin calls and the like? So I think there's a price for everything, which is kind of, so it is so long as you're risk managing it appropriately, you should be.
Now one hopes the world will figure it out.
And the question also is, increasingly, folks are going to provide custody against these digital assets and the like, and then, it's a payment, it's more of a payment mechanism. Yes. So you cannot ignore this. This will slowly become mainstream.
Oh, okay. We have to be prepared for that, and I think India is preparing for that. Well, it was a pleasure having you here. Since we both belong to the same suburb in Mumbai, have you done are you doing the usual rounds in Matunga? What are your favorite spots?
So I have my dosa fix on my way back to the airport. I go to Ramanayak, the Udupi place, and I it's a free commercial for Sai, who owns it. He went to school with me, so it's kind of so it's kind of it's a fantastic community. So I usually haunt the same places, and it's really fantastic to see they're all still standing there.
Yes, Ramanayak has not changed. Concern's coffee has not changed.
No, exactly. And then I kind of it's the Hanuman temple near Don Bosco where I have to go, and then the Ganesh temple near Matunga station on the way to Ray College. So it's kind of it's the same drill, and all of my friends are still kind of, in different guises still there or about.
So good to hear that. Those are my favorite places too. Thank you very much, Mr. Raghavan, for joining us and taking us on a global tour as well as the Matunga tour.
No, thanks for hosting me. It's been a pleasure.
Well, that's it on this edition of CNBC TV18 Conversations. I'm sure you enjoyed it as much as I did talking to Mr. Raghavan.